made this video for you. My very first tip is if you're shopping for health insurance and you come across one of those forms to fill out, whatever you do, don't fill it out. And I'm not just saying that just because I don't want a competitor calling you. I promise you, if you fill one of those forms out, you'll have dozens of my competitors calling you night and day, text messaging you, leaving you voice messages until your mailbox is full and you'll have to shut off your phone. So resist the urge to fill one of those forms out. What I'm about to do is go over the most common private plan options out there. Now, depending on the state that you live in, either none of these, some of these, or all of these options I show you will be available to you. Your state actually has to approve each one of these plans in order for them to be offered to residents in your state. The first option I'd like to go over is short-term medical plans. Basically, they're catastrophic coverages designed to cover new injuries or illnesses. So keep in mind, they don't cover pre-existing conditions. Most of them won't cover wellness visits at all, and they won't cover doctor visits until your deductible's been met. So you can actually choose your deductible and coinsurance and your out-of-pocket max. Keep in mind, the lower the deductible and coinsurance, the higher your premium will be. There's also usually a max coverage that they'll pay over the lifetime of your policy. Now, depending on the state that you reside in, either this plan is not available, or in some states it's available for only 30 days, 6 months, 12 months, and up to 2 12-month renewable periods. It's actually pretty easy to get approved for one of these plans. They usually only have yes or no health questions. So if you're in good general health and you just need something pretty affordable, this might be a good option for you. Next option I'm going to go over with you is what's called an indemnity plan. Indemnity plans are not like traditional insurance where you pay a deductible and then a percentage of your services. How it works is that the plan promises to pay a fixed amount based on the services that you're provided. And so they don't really care what your doctor ends up charging you. The benefit will stay the same regardless. So you just pay the difference. So I'm going to go over an example so that you can see how it works. Let's just say you needed to have shoulder arthroscopy. Now I'm going to go over to healthcarebluebook.com, and it's kind of like Kelly Blue Book, except for it tells you the going rate for medical procedures. Now, I'm in Coeur d'Alene, Idaho, and so in my area, the average price for shoulder arthroscopy surgery is $6,200. Now, if you've ever had surgery before, you will know that you don't just get one bill for your surgery. You're going to get billed by 3 different entities: the facility, physician, and the anesthesiologist. So let's see how this indemnity plan pays out. Now, according to this plan, if we were to get the 2 unit, then they'll pay 2 times the policy fee schedule plus 25% of the surgical benefit payable to cover anesthesiologists, and then $3,000 for the surgery center. I have this sample fee schedule here. So as you can see, shoulder arthroscopy surgery, they'll pay 2 times that amount because we're at 2 units. Okay, times 2. And then don't forget, the 25% in addition to cover anesthesiologists. So I'm going to multiply it by 1.25. And then I'm going to add finally the $3,000 towards the surgical center. So in this case, the average cost is $6,200 in my area, and this plan will pay out $5,677. Now, that's actually not bad. You pay the remaining amount, which is right around $500. If you had normal traditional insurance with a $5,000 deductible, how much do you think your out-of-pocket cost would be for this same procedure? I want you to drop your guesses in the comments below. All right, now if you had guessed at least $5,000, then you're correct. So the benefit of this indemnity plan is that many times you don't have to meet a deductible. It'll pay a portion right away. Now, the downside to this plan is that this plan will pay the same no matter what the surgeon charges. So as you can see, if your surgery ends up being towards a $16,000 range, then your out-of-pocket cost is a lot more. And the other thing to notice too is that different area has different costs to the same procedure. So I just entered in Portland, Oregon, which is not that far away from me, but let's just see what the same surgery would cost in Portland. In Portland, the same procedure would be right around $9,300, and it could go up to $20,000. So as you can see, the downside also is that there's no stop loss to this. Meaning if you go in for a procedure, ends up being $100,000 and the plan pays a fixed amount, but not enough to cover that, then you end up owing the difference. So in general, this plan, I would only recommend for if you're really, really young and healthy and you're really watching your budget. It does require some underwriting depending on how robust the plan is, but they also won't cover pre-existing conditions. Some of them won't for a certain period of time. The next option I'm going to review with you is health shares. Health shares are growing popularity because of the costs and affordability. So health shares, keep in mind, is not insurance. Claims are not paid by an insurance carrier. How it works is people like you and I across the country pooling our money together. So each month you have a set monthly contribution, and your amount is deposited into an escrow account along with other members' contributions. Claims are paid out of that escrow account that the group manages. Now, different health shares will handle claims differently. Some of them will require you to pay for your services upfront, and then you have to wait 60 to 90 days to be reimbursed. Other health shares do use a nationwide network, and so those health shares, you'll be able to hand your card over to your provider. Your provider can direct bill them, and they can electronically pay your providers. Now, there's different plan coverage types. Some of the plans are just strictly catastrophic coverage, and then other health shares have added plans that resemble more like traditional health insurance. So these health shares are definitely not a good option for those with major health issues if you have chronic illnesses, or if you take high cost or name brand drugs, because in general, these health shares will not cover prescriptions. They just give you a drug discount program. So if you have very low risk tolerance, then I would say health shares are not a good fit for you. Some things to consider. As far as health-wise, most of these health shares are guaranteed issue. So you'll have to think about your pre-existing conditions that you have and decide if you're willing to take on that risk. Now, some health shares will not allow tobacco users, and some will, but usually they'll charge you an extra $60, $70 per month if you're a tobacco user. There's usually some kind of religious aspect to these health shares. Some of them require that you attend church regularly, and some of them are more lax, meaning that as long as you believe that God exists, then they'll accept you. Also, there's usually a setup fee. So the setup fee can range between $100 or up to, I've seen them up to $200. There are some things that you need to consider too, because this is a religious-based organization. There's going to be a lot of exclusions too to keep in mind. So I'll give you an example. They do not allow, they won't pay for services that are self-induced harm. So say you have a teenager that attempted to commit suicide or self-harm, then some of these health shares may refuse to pay that claim. And also keep in mind that these are not plans that are backed by the government. So if they become insolvent or there's some kind of a dispute, there is no guarantee that they'll pay your claim. So I would say in general, if you're in good health, you're really watching your budget, and you have a high risk tolerance, then this may be a good option. And I think it's better than going without any coverage. Now, the next two options I'm going to show you are supplemental plans that cover the gaps and complement short-term medical plans, indemnity plans, and health shares. So the first one is what's called a MEC plan, which stands for Minimum Essential Coverage. So the main purpose of these plans is to cover preventative and wellness services such as your annual PAP, a mammogram, wellness colonoscopy, flu shots, immunizations, birth control, anything that is considered preventative. A lot of these plans have also added doctor visits, specialist visits, and urgent care visits for a small copay. So this middle one is the most popular one that I offer my clients. You get all the preventative and wellness visits covered 100% with no deductible or copays to meet. And then you get a combination of 5 visits, and you could choose between primary care, specialist visits, urgent care. You are limited to only 5, so that means you would have to pay out of pocket for anything above that. But if you're a healthy person and you only go to the doctor once or twice a year, this may be sufficient for you. You can also upgrade and do the unlimited coverage one, where you can go to as many primary care visits or specialist visits you choose, but the plan actually will cost more. So as you can see, if you do a MEC plan and it covers the wellness visits, the doctor, specialists, and urgent care, and then you combine it with a short-term medical plan or an indemnity plan or health share to cover the hospitalizations and surgeries. Between those two, in general, would be sufficient if you're in good general health. Now, these MEC plans, they don't have pre-existing conditions clauses because they pretty much only cover preventative and wellness services, doctor visits, and urgent care. They will not cover surgeries or hospitalizations, so they're not sufficient just by having this plan in itself. These do use nationwide networks, so you are covered nationwide. If you're traveling to a different state and you need urgent care, then for the most part, you're covered. So the last supplement I wanted to go over with you is critical illness and accident plans. And I highly recommend these plans no matter what type of insurance you have, because it doesn't matter if you have a marketplace plan or group coverage through work or one of these private plans that we reviewed. There's always going to be limitations and gaps to your coverage. And so I'm going to go ahead and show you how affordable these plans are. I'm going to run a quote for a 50-year-old male in Idaho. And of course, the younger you are, then the more lower the premiums are. So the first quote is going to be on an accident plan, which actually I surprisingly get quite a bit of claims for accidents. So as you can see, it's not very much, $23, $31. And what it covers is in the event of an injury due to an accident, then it helps cover the gap. So let's just say you were shoveling snow in your driveway and you slipped on ice, fell, broke your arm, and had to go to the emergency room, had x-rays, had a cast put on. Most likely something like that would run $3,000 to $4,000. Well, if your deductible or out of pocket is more than that, you're going to be paying 100% of that unless you had a plan like this. So in that case, you know, if you had one unit even, then this plan would cover up to $2,000 of that and you just paid the remaining amount. But if you had 2 units, then it would probably pay for almost the whole thing. That the accident plan also will include things like a death benefit in the event of, a injury that you don't survive, such as a car accident, or say you fell off a ladder and you didn't survive, then your beneficiaries would have extra money to pay for your medical bills, pays off debt, helps pay for funeral, that kind of stuff. Also includes emergency medical transportation. So you get a little benefit here for ambulance or if you need an airlift. So for me, I think that just having this benefit right here and the emergency medical transportation, I think is worth the $23 at least. There are other benefits such as dismemberment. If you were to lose a limb or lose your eyesight, they'll pay a fixed amount as well. So we're going to go back and quote the critical illness. Critical illness is in the event that you're diagnosed with cancer, heart attack, and stroke, which, by the way, are the top 3 leading causes of death in the United States right now. Now, how critical illness works is you don't have to actually die from those. Upon diagnosis, they will issue you a lump sum check for the face amount. And as you can see here, for a 50-year-old male, it's really not that expensive. So there's no reason not to get it. But it can go up to $50,000. Now, with this lump sum check, you can do whatever you want with it. You can use it to fly to Germany for treatment that traditional insurance won't pay for. And let's face it, if you have a critical illness, you're not working. So if you don't have some sort of income coming in, you're going to need money to pay for your mortgage or your living expenses. Also, if you have someone caring for you, that person's not really working. So you could actually help them out financially or use the money to pay for a nurse to come care for you. The other thing to consider is if you have a critical illness, even if you have really good insurance, there's going to be expenses that insurance won't cover. So, for example, you decide that you want to fly to the Mayo Clinic and have the best treatment available. Well, then there's going to be travel expenses too. So keep that in mind. So the nice thing is if you get a plan like this, those upon diagnosis, they'll cut you a check and they don't care what you use the money for. You can even go on vacation with it or use it to pay for expensive medications. Cancer medications can be expensive. So it just kind of gives you an extra layer of peace of mind and protection. In general, the accident plans will not require underwriting, but critical illness insurance does require underwriting. So you definitely want to apply for critical illness prior to getting cancer or having a heart attack or stroke in the last 2 years. So there you have it, the most common private plans offered out there. And keep in mind, these are all state specific and your needs are going to be different. Your situation is going to be different. Feel free to reach out to me if you have any questions about what I presented, or if you would like me to run a personalized quote for any of the options I went over. My email address is malia@customizeyourinsurance.com. I would love to hear some feedback. I know that I threw a lot of information at you today, but hopefully you found that helpful. If you could just comment below and let me know what you thought of it, that I'd appreciate it. Also, in the next video, I'm planning on going over the things to do and options that you have if you or a loved one need to take expensive name brand prescription drugs. Thank you for tuning in, and I'll see you next time.